Hello everyone, welcome to another weekly market review. It is the 18th of January 2021. The altcoin market is absolutely on fire. Some big opportunities and we're making some big trades. Let's get right down to it. Looking at the total market cap chart, and what we can see is we've had the breakout and a retest. We in fact exactly retested these tops right here on the total market cap chart, and similar to last time we have started to grind up, and essentially, last time when we were grinding up after retesting the highs, we were on the precipice of what we could call possibly the greatest move that mankind has seen on the face of this planet. The percentage gains on some of those altcoins are absolutely unheard of, and essentially this was when we began to have positive correlation, and everything else was a different story. But that being said, it's a different cycle, and you can see because it's a different cycle, prices moving differently. We have made these comparisons many times in the past. 2015, 2017, how it was so different, slow grind up, a lot of uncertainty about Bitcoin as well. Nobody knew if this thing is going to prove itself. This cycle around, already down here when BTC is in the low 10Ks, it had already proved itself because there was such a massive influx. This 4 times that Bitcoin went in its price was such a big influx of money, of smart money. So smart money, this is the first asset on the face of this planet where smart money is coming so much later. It's coming a decade into the inception of an asset. Generally most of the assets, smart money would already be in and controlling the markets by now. But no matter what, they are in publicly. Maybe they have been accumulating through this entire consolidation, but a lot of the smart money is in publicly. We were talking about Paul Tudor Jones much earlier, and how he is a sort of a pioneer, and maybe not now, but there will be a lot more capital that still has to come in, and the flows have become very important when it comes to how price is being charted and how price is moving. But for now, what we have is the one similarity in terms of a breakout and a retest, and we are holding up pretty well. So for the total market cap chart, I think this is still very valid. The actual place to be negating this prospect is if we get back down to 840 million and start breaking lower. But for now, we have broken out on very high volume, very high momentum. We have retested it and got a very solid reaction from that level. So now it is to be seen, and we need to look at the other charts to figure out if this is actually possible. Looking at the altcoin market cap chart, here we have a strong weekly level. Last week we had closed below it. This week we did make a drop and very strong reaction from there, and we have closed above it. So it's a strong weekly close. Basically closing above significant resistance for now. And this week what we are trying to do is flip it into support. But this is very aggressive, guys. If you just look at the shape, it's just so very aggressive, the kind of reaction that we have gotten off of the lows. So let's look at the 4 hour for a second. So on the 4 hour, we can see essentially this is how price panned out. We built a channel, broke up, we retested the top of the channel as support, made another breakout. Essentially this is where we were looking at price, and I told you we had gotten a big strong reaction downwards, and if we were to make a continuation, we just had to close above this. We got a close and a very, very strong move up from there, and essentially this is, once we had made the move, these are the targets that we were looking at. And essentially these tops up here, this was more than a month long range, or essentially it was at least a month, but I think it was slightly more than a month, about 40-45 days. So we broke up from this range and essentially retested the top of this range, but it was also a confluence with the golden pocket. So this was essentially our first the first place where we were looking to get in. And what we did is then, let's go back to the 2 hour. So we made a higher low and a higher high. So we flipped the trend again to an uptrend, and that is when I got onto Twitter and I gave us some targets for a rebuy. So this wick is essentially where we were buying again, and what price has done is made another very strong move away from the second buy zone. This is 15. You can see from the first buy zone we moved up about 30% after having a drop, then we moved up another 15%. So if you did make both of these buys, you're very comfortably, essentially if you did not sell as well, you're still very comfortably, your average buy zone is somewhere here in the middle, close to 270-80 billion. I'm looking at the total 2 chart, but you could be charting any of the large caps or some of the mid caps as well. But the thing is, alt BTC has started to move, so a lot of the coins are not looking like this chart. But if you see what this chart is representing, essentially just look at it. So we've built a ramp, broke up above it, retested it, made a consolidation, and we made a confirmed breakout with a retest. So in terms of just pure price, this is very, very bullish, guys. There's nothing bearish about it, and all of this has happened on very high volume. This breakout has been on very, very high volume. So people who are getting bearish up here, they had to kind of realize and understand that once you had a high volume breakout with a retest, it would take a very, very big event for the market to kind of start getting back into this range. And these are the kind of moves that you are looking for in all markets. These are the kind of moves that prove that this market has strength. Just look at this strong breakout with the retest and look at the reaction from the retest. Price has just run away from these levels of value. So essentially for now, I would say this is quite as exhausted. It looks it, but the thing is, like, now we are entering what could possibly be mega bull territory. So if it is that, then there is not much exhaustion, guys, at least not at the beginning of the move. But if it is so that price has moved away too quickly, then we should be looking for price to base out again at this our previous area of value. And this consolidation, the volume in this consolidation should be able to support the market. So I would say that if we do end up getting 290, about 290 billion to 300 billion, this zone should be a good buy zone. Other than that, it looks like it is possible that we could just grind here and grind up and make that breakout. So if that is so, essentially you should have been just buying the dips. Buying up here, I would not recommend it because this is pretty stretched, by any means. It's difficult to manage risk. It's very easy for price to just come back, spike down below, and just take out these very late longs, because you essentially had a week, so from the 11th of January, it is the 18th. You had a long time to be able to get in at good prices after the big breakdown. But now, this could be a bit of a trap. But if the market is too bullish, it's just easier to be moving up. Price doesn't essentially need to take the liquidity. So that's something you need to see. So for the total market, altcoin market cap, I think if we are to get a bit of a retrace, then you can get in. Essentially, if you do break structure and you still for some reason have not gotten in, once you have a confirmed break in structure, you can micromanage some kind of positions up here. But these were the places to be building your positions, guys. You should be well in profit. Your stop should be in profit, even if you did not play this move up or you have not accumulated up here. This is just look at the weekly chart. We are yet to reach all-time highs on this chart, on the altcoin market cap chart. We are yet to reach all-time highs. We are yet to breach that. So there is still a lot of room for growth. There is still a lot of possibility for where price can be, considering the amount of capital that is just jumping onto the Bitcoin train. What people are not realizing is that all those whales are really having big capital to be able to move their coins. So just remember that these opportunities do not come again and again. It is very probable this might be one of the last times you are able to make such big gains. So what I would say is just don't miss out. And I've been saying that for a while, but just manage your risk still, because nothing goes straight up, and the market can easily trap people who are greedy. And by now you have to have learned how to not be greedy if you've been in crypto over the last 3 to 4 years. So for alts against BTC, what we have is this chart of the DeFi index. This is DeFi against Bitcoin, and we have a complete market cycle. What you can see as the Wall Street cheat sheet, it's pretty clean. And essentially this whole while, once price was breaking down from here, we're looking for a place where the market could bottom. And you can see we have disbelief over here. So essentially this is where everything's starting. Here's your hope, and you can see prices come all the way back down to near a full retrace, close to the disbelief, which could essentially be anger. It is possible. If that is so, what one needs to understand is there is a probability of depression as well. This is just a probability, and what I would say is this gets negated if alts against BTC do come all the way up, build a structure here, and continue. So what I would say is keep a close lookout against these alt BTC pairs, because there's two things that can lead to this. This is either if Bitcoin starts correcting, or if Bitcoin starts moving up really hard and alts against BTC take a hit again. Because for now what we are getting is what could be potentially an anger bounce, but it could also be that we've just had a very short cycle for anger, where this was just the anger bounce, and all of this has been depression, wherein this is just the beginning. And for that, if we are moving into disbelief again, this is how alts against BTC would structure out, wherein they would just start making new highs. Essentially, considering what that Bitcoin has made all-time highs, this should be something that is possible, and this is something that should be what is playing out. But what I want to tell you, just in terms of the market cycle and the way price does this, this is just the psychology of the market. You can see that once we are getting here, considering what is happening with the DeFi coins and everything else, people will be really over leveraged and very bullish. So if price is to time correct them, and if all of this entire phase, if this took what we can say in November, all of November and December, then this is essentially possibly another 3 to 4 months. So it could be all the way, if it is to be depression right here, then we could be moving all the way back to April and having some kind of a move late June or something like that. So this is just in terms of the entire market structure, when we're looking at a macro view of essentially the most important asset class, which is currently going to drive the narrative for altcoins in the coming future. So this is something to be aware of. Just in terms of BTC, still, this is such a great area of value when it comes to the valuation of these coins in terms of Bitcoin, and this reflects what the actual potential in fact is, because just from the anger bounce, the kind of moves we are getting, this is people getting euphoric in these moves itself, and essentially this is what they're getting euphoric in, not the actual market cycle. So just remember that prices may be very inflated in terms of Bitcoin, But this is what happened to people in the previous market cycle, because they were so used to uh, low three digits, and once Bitcoin ended up getting to the 2000s and 3000s, the valuations in their head were already too high, so many people ended up selling very early because they just could not fathom, and they just could not imagine the potential of a bubble, of a speculative asset class which has limited supply. That is the key. So when people cannot fathom that, this is what happens. They end up selling early, or they do not have the correct kind of game plan. So you need to understand all of this. So for now, odds against BTC, this is something to watch out for. Once DeFi against BTC starts to reach these December levels, it's going to be very critical for what happens to the market, and we are very near that. Just another I would say just another 10% or so, 10 to 20%, maybe 30%, and we will be exactly in that phase where price needs to decide that if we are going to skip this entire consolidation and depression and just move straight to disbelief and start moving up and breaking market structure. So looking at Bitcoin, and this is essentially its September lows, and what we have drawn are the trend lines of its trajectory. And the topmost white trend line was when it was at its essential parabolic trajectory towards all-time high. When it broke it and retested it, essentially this is where first of all it was showing its strength, but what we had is that potential breakdown where price could have gone lower. This is a place where I found to be able to manage risk for potential downside, but it had a very tight negation. Everybody was thinking, what should be the game plan. But as soon as price did break up here, this was the point of negation, and this was the point to get back into the market. And you can see why it was a point to get back into the market. What we did since then is we built another very strong move, and I charted out a potential trajectory of that move as well. Eventually we hit a target of 41,500, from where we did get a correction of that parabolic, of the second move's parabolic. And what we did is moved all the way back, retested it, and broke down below again. So in terms of what potentially price could do if it has to continue is, we could be in this phase of a reconsolidation, because Bitcoin topped out is what it was 8th of January. So we've had 10 days of consolidation since. In terms of the magnitude of the move, this is significant magnitude. It's about 28-29%. What else we have to understand is the money flow that took place, in this entire move, all the way till 31,500. This is the price. 31,500 is where on Coinbase we had one of the biggest withdrawals that have happened in the history of Coinbase. So that was institutions. They were buying up here. And what I spoke about is if price has to correct, and the people who bought, essentially I think it was between 20 and 30,000 BTC. The party that bought Bitcoin when it was at these valuations, 32,000, if they are still interested, they do have the potential to hold price up even if we do retest it. And for now, what have we done? Just look at the trajectory and magnitude of this move. So we front run the 0.5 because this is essentially the move. Here we front run the 0.5. This is where we had last week's Monday low. This is all last week. This is last week's weekly open and last week's Monday low. This week's weekly open is right about here as well. But what we did is we front ran the 0.5 and we made a very strong move away from it. And essentially all we've done since then is reconsolidate. We've had some tether FUD. It has not been able to move price for now we have a descending wedge, which it is possible that Bitcoin ends up breaking up from this. What I would say is that if we do start consolidating above this previous weekly open, these levels of 38,400 and essentially 39k, this is the support. You can see support, breakdown, resistance, came back and broke it. And what we did is just draw a horizontal up here. So we did make another fake out. We lost that level again. But if price does end up coming here and reconsolidating, I don't see any reason for why Bitcoin would not continue. For now, something I highlighted yesterday, somewhere around, I would say somewhere close to the 15th of January, we've had a massive influx onto the spot exchanges. It's a massive influx of Bitcoin. There is potential possibility that a lot of it is for altcoins, because you saw odds against BTC. We just charted it where we are potentially in that alt BTC cycle. So it could be part of it is for altcoins, but what we need for now is for the stablecoin money to start flowing. Because we had that tether FUD, we have not had any money printing over the last 2 to 3 days, but you can see price is still being supported. So for Bitcoin, I would say if there is for upside, price needs to reconsolidate above here. But we've had multiple places to manage risk. If you're in the Discord, give a potential long signal up here. So you have potential place to manage risk. In terms of levels, this previous weekly open level, which is confluent with this parabolic trend line, and also an anchored VWAP. It's a different exchange, so I cannot draw it. Multi-exchange anchored VWAP, which is also confluent with this level. So I would say for further downside, first, this is the level to lose, but essentially to break market structure, we need to start heading into the 20Ks and lose the yearly open for any kind of a bearish narrative. Until then, this is just a standard 30% retrace. Incredible amounts of money have flown in all the way in this move up. So, it needs something really special for price to end up having or wanting to go back down. So yeah, Bitcoin upside, confirmed upside once price starts moving above 39k. Until then, we could do a potential endless sideways and let alts move the way that they are. But essentially you can see that the market is still kind of shifty every time Bitcoin is doing something. A lot of the altcoins are selling off heavy into supports, but those have all been great buys because you saw the total 2 chart, how much stronger altcoins are. Price is right about here, and this is what the total 2 chart is doing with the altcoins. And essentially this is just that alt BTC outperformance. So that's the game plan for Bitcoin. Use these lower levels, this 33k, to be managing risk for potential upside. If we start breaking below the yearly open, that's alarm bells. But if you start moving above 39k, it could be potential consolidation. And you better be watching those alt BTC pairs, what they do once BTC gains strength. Because if it is so that they maintain correlation and gain strength, then you're in for the time of your life. But if they start to lose correlation again, then it is potentially possible that depression cycle may be playing out for alts BTC. For the indices, here we're looking at the previous 2 analogs, and this is a chart you've seen me look at repeatedly in multiple market reviews, where we are comparing the performance of the inception of this bull market since its inception in March to the previous best performers. So we have actually been outperforming 2009, 2020, 1982, 1987. But this is something that I had mentioned before, where once the initial phase and the initial trajectory has happened, you can see how it flattens out, eventually to what could potentially be a bunch of sideways, where the fundamentals are trying to catch up with the technicals. because that the way the technicals have moved, fundamentals have been lagging. So it is potentially possible. I mean, this is still a sample size that we have. It is a small sample size, so we have to see what price can do and whether price can do something similar that we have done. And I mean, this is a decade ago, this is nearly 40 years ago, so but what it was is major market bottoms. What it was special conditions under which the market was performing the way it has been over the last 8 months, over the last 8 to 10 months. So this is something to watch out for. This is something to keep a lookout for, because if we do get such sort of a phase, and if that is to manifest soon, then it would manifest essentially. It should manifest in most markets, including cryptocurrencies. But we have to see. But for now, because of the way prices, the way momentum is, we just have to find places to manage risk and be looking for upside, because volume, price, and momentum is suggesting that. But in the end, even while we are doing that, we are still always looking for a place to manage risk. For this market as well, you can see essentially what we've had is another base which we broke out of. We have been retesting it, but this is something that you have to now be intelligent about. This is not going to be a only green button market if prices to start doing this, because there will still be sectors that will be outperforming, and there will be still those sectors which are lagging, which will be catching up. So it is still a winner's market. You just will have to start getting more and more selective. Here's another repeated chart from last time. Essentially, this will probably be in October or mid-November when I was charting this. And what we are looking at is the emerging markets iShare Trust, the ETF, along with the copper base. And essentially what I was telling you is, the longer the base, the stronger the move. So this is a 10-year base. This is a decade-long base that we have had a breakout from. So this narrative that I had of potentially a sideways, we have to see if that is what it is, or if this is just going to be unprecedented. And this move is something that is spoken about for centuries, because we just compared it to the two strongest past moves, and currently we are outperforming. But if this is the kind of base breakout we have had, and we are to get continuation over here, who knows how long this can go on. Because of course also this is just a repricing against the dollar, and this move can be unprecedented because the amount of printing that has happened in the supply increase is also unprecedented. So everything on the chart is only reflecting that. So essentially this is the emerging markets, copper. Both we have gotten in early, and both seem to be at a consolidation after a big breakout of a base. You saw this on Bitcoin as well. You've seen this on several assets. But you can see these bases are not small. This is a 7-year base. This is a decade-long base. So these are very, very big bases where we're having strong breakouts with after such a big consolidation on high volume. Just look at the breakout on these, 8-10% on the entire emerging markets. That's very, very strong. It was a very strong end of the year, and January has continued to impress as well. So this is the theme for traditional markets. It is small cap stocks, it is emerging markets, and it is very, very specific to sectors rather than the entire broad market moving together. Well, here we are. This is small caps against the SPX, and you can see this is what we were doing, and this is exactly what I drew right at the beginning of November. A strong consolidation where we were looking for potential of a confirmed breakout, and look at the move we've gotten from there. This is just pure relative strength. So if Measure this in terms of pure dollar, like, there is nothing to it. It's a 20% move up, and you can see we have not had that kind of a move since 2008, 2009, and even then it was not so parabolic in nature. There was only a few 18-20% legs that we were getting up. But if you measure this entire leg up, this is beginning in early September. It's almost a 30% move up. So again, this is unprecedented, guys. This is something new. It's totally different. Just look at the money flow, how broad the market has become. This is reflecting the early 2000s. We had 30-40% moves against the SPY in small caps. Essentially, small cap traders have suffered for a couple of decades, where it's only been about the big names and nothing else. But currently, value investors and penny stock traders, they are having the time of their life. So this is essentially what this chart is reflecting. And congrats if you're in, because we were looking at this early November, right before the breakout. In terms of commodities, I just want to very quickly show you, these are the quarterly charts, for multiple assets that I very quickly want to shuffle through. So you can just see the repricing of the printing of the dollar, what is happening when it's taking place. This is what we're looking at is platinum. Here is silver after a fat move, getting a bit of a consolidation. Here's copper, new highs after a long base. This is wheat, again broke out of a 5-year base. Here is coffee, had a very strong quarter, the last quarter. Here's gold has been moving since end of 2018. So we're basically retesting these tops and trying to build a new base as support. Okay, then we have oil, of course, because of the fundamentals, absolutely tanked. But since then, again, is having unprecedented moves to the upside. This is oil again. Here's palladium. Palladium has been one of the metals that's been on a very long uptrend. Essentially, it's been more than a decade. But okay, here we have rice after a big move and a strong drop, looking up again. Here's corn, a very long base. This is something we looked at before. Corn, after I think it's a 7 or 8 year base, broke up from it. This is gold against silver. That's fine. That's not against the dollar, but everything against the dollar, you can very clearly see. Look at soya beans. Had an incredible quarter last quarter, and essentially just still all of January just looking up. Here's sugar, also just breaking out of a 3 or 4 year base. Same thing with lumber. We played lumber for the longest while. Absolutely monster moves on this one. At one point, it was moving more than Bitcoin with that same amount of volatility. This is, all of these assets is just showing me the death of a currency, guys. This reflects the death of the dollar. All these assets, these are real world assets, even after being so heavily controlled by the fat central banks. They're still just having to reprice all that money printing that's going on. This is just the reflection of it. Nat gas, of course, it had some fundamental issues, but also starting to look up. Here's uranium. This market has been dead and buried for a long time. But you want to see the quarterly close on that, it's quite a solid quarterly close. And prices starting to trade above this. We start finding support at around above $15, then you can see the potential upside on this as well. This has just been on a perpetual downtrend, all the way since its inception. So once prices left all of this behind, this is 5 years of, just chopping everybody up, and uranium has quite a big community. So this is leaving these people behind. The next resistance is another 2x, 2.5x from here. So essentially everything is just repricing itself against the dollar. And I think for a lot of for a lot of simulations, for a lot of people who are inputting this into the simulations, trying to gauge what is coming into the future, I think it's quite a scary prospect. Nobody had priced in such an increase in the supply of the dollar, and nobody had really imagined it. So now that we're having it, it is just unprecedented moves across the board, So you've seen crypto, you've seen what's happening with Bitcoin, you've seen what is happening in the commodities right here. Also, I just showed you its comparison for the index, for the American index, with its predecessors, that have been the biggest moves in its history. It is outperforming those as well. So there we have it. This is just a repricing of something that has never happened before. So we have to allow it to happen, guys, and ride it, make the most of it. We never know what is coming for us in the future. So really, just make the most of it, build some land, and start growing your own food. I mean, this is so imperative considering what is coming for us. These charts just reflect Armageddon unless something magically can stabilize them and hold prices up, because it's just, it's not Armageddon in that sense, but it is just such extreme amounts of uncertainty. That's all it is. So in those times, it's really, really important, hedge your wealth, by investing in the long term, and having your own land and being able to grow your own food is a great way to build security for no matter what is coming ahead for us and for the generations that are coming after us. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!